Hi friends, this is Bank Nifty 5 minute chart on 31st Jan 2023. In this video, I'm going to show you how to identify a trade opportunity using multiple techniques. The first one I'm going to make use of is market maker strategy. The second one is uh, pitchfork. The third one is frequency tuning of the pitchfork. Okay, and before doing any of these things, the most and the fundamental thing that I do is reading the context of the market, which means what are sellers doing and what are buyers doing and who has how much strength in which area. So this sort of analysis will give an edge over any blind trading way of retail traders. So let me show you how that can be done. Let's quickly start the analysis. So the day opened with a powerful bearish candle, and that is coming from the inward frequency of this solid supply zone. Many people might have got tempted to short the market, but look at the very next candle after this first candle. Okay, the candle has gone up with high volatility. So that means that there is some manipulation done with the low of the first candle. That is the first manipulation, and thereafter there is some price coming down. There is some constant importing of highs of each of these candles. So let me highlight that in this rectangular box. Okay, so you see that this is very active area of market makers, that they constantly pound this highs of this each candle until the market realizes that market is going to fall, and then there's a sudden impulse of price going below this low. Okay, so this means the second low now being targeted by market makers is this low. Okay, the first low manipulation, this is the second low, and after the second manipulation, imagine what would have been in the mind of retail traders. So many people might have got entered into sell stop orders once the market has gone below this low. So once there is immense supply from this zone, that should be counteracted by heavy demand, which is occupied by market makers in the opposite direction. So now there is heavy supply compensated by heavy demand, and that's the reason you see a sudden spike in the opposite direction. So this is a significant market footprint. Now you might be also asking that the high immediately didn't go back. Okay, so there is two-way manipulation here. The first manipulation has been done with this low, and the second manipulation has been done with this low. Okay, so there's two-way manipulation. Then what should be our position? How should we be inclined to such market manipulation? So when such manipulation happens, two-way manipulation happens, we just wait to see in which direction market is flowing after the two-way manipulation. Clearly, after two-way manipulation here, market is going upside. So we should be thinking about a long trade opportunity. That is the first idea. This is how we have to read the context. Now that you have got a bias towards long side, now let us draw some specific lines. Okay, the first line I'm going to draw is a pitchfork. Okay, this should be a standard pitchfork. This fork doesn't have any relevance. You don't see price catching any of these edges. However, if I tune this pitchfork to this latest high, then I create something called reverse pitchfork. Okay, which means you have a context and you align your line work along, adjusting to your context. Okay, so now this is the reverse pitchfork. That means you have reverse engineered this pitchfork, taking this high as account. Now, the magnitude of this pitchfork, that means the distance between the midline and outline, is going to be constant all through. And then when market reaches this position, this is the point where price is testing this outline of the pitchfork and creating some sort of buying pressure. So this should be an opportunity to go long. Okay. We can also draw another pitchfork with the latest extremes, as I can show you here, to see if that could be a market edge. Now you see that the price is now intersecting beautifully at two different pitchforks simultaneously. So this is a wonderful opportunity to go long. You might be also be wondering if the next few candles might be touching any of these lows and coming back. Okay, there is quite a possibility. But here in this case, price is going to take off from this zone itself, because there is some intersection of price and then the very next candle is gone high. So in our case, we have entered a long trade opportunity at the very close of this candle, that means the very opening of this candle, this is the point where you have entered long position, and wherever you enter long position, the stop loss is always below this low, because this is the point where market makers have taken market high, and in most probability they would not allow the market to come down below this low, and that's the reason this is going to be a stop loss. Now this is a potential powerful long opportunity. Now if this is the entry you have made, look at the risk reward ratio. So once you have entered the market, you don't have to worry how market is going to play here and there. All you have done is enough groundwork, enough analysis, enough research, enough market bias, and now you enter the market and just wait and watch. Let the market take its own course. So this is the point where you have entered the market. This is the stop loss, and look at the risk reward ratio. So far the risk reward ratio has proven to be somewhere around 1:2, and there is still some movement for upward direction. So even if you keep this trade open for tomorrow, I think market is going to high. Whether it may create a bump down or directly give a gap up, or in whichever case, you should be holding your position until the market is testing at somewhere around this point. Okay, so somewhere around 41,000 41,009. Okay, so this is the point where you have to keep your trade open, because in that way you are following proper risk management. If you are taking so much risk, then you should be rewarded in so much of positions in the upward direction. So the risk and reward, if you maintain trades like this in the long run, you will be able to make some very good trade opportunity. Okay, if by any chance you have missed to enter a trade opportunity here, market always gives you multiple opportunities. Let me show you how another footprint has helped you, may help you to take another opportunity in case you haven't missed to enter here. Now that market has created another high above this one, you can see the same footprint now of market makers in the bottom wicks of these candles. Okay, see how the lows of each candles are now being pounded in this zone. Okay, so this is another significant market makers footprint. Now they are pounding, earlier they are pounding highs of each candle to create a lower low. Now they are pounding the lows of each candle to create higher high. So this is a significant market move. Okay, so now when price comes back to this zone, they created a powerful bullish bar. It is not random that price has created a bullish bar like this. It is because of specified lines which I'm going to show you now. So this is the price extremes that we are capturing now. Now you see that the midline of the pitchfork is now perfectly intersecting and creating a powerful bullish bar. The upward wick of this candle doesn't exist, which means the sellers are exhausting at their position from this level, and buyers taking control of the market very heavily. So this is another opportunity for you to go long with the stop loss below this candle. Okay, so this is how we have to assume market entries, guys. And if you want to take a long position with this low as your stop loss, then you should have entered a trade with again 1:3 risk reward ratio. Let us see if you have achieved that. So this is the risk and this is the reward. Okay, the reward has gone somewhere into 1.35. Okay, so there are multiple trade opportunities that one can see. If you have entered here with a stop loss below this low, then your reward is somewhere around this level. If you have entered a long trade with this at this position with this low as a stop loss, then your reward is somewhere here. So this is how you have to analyze trades, guys. And if you are interested to learn these advanced techniques, please do reach us out. We could be of great help to you, because we will help you to read price in such a way that you become a master of interpreting markets, and then you can take positions at your own with great confidence and comfort. So with this note, I'm signing off. I would also request you to please like and subscribe our videos to create some wonderful content for all of us. Thank you so much. See you in the video. Bye bye.